What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about the question that is on absolutely everybody's lips right now. Will the stock market crash again? In today's video, I really want to give both sides of the story, both sides of the argument. So I have 5 reasons in regards to why the stock market could continue to go up, and I have 5 reasons explaining why I believe it could potentially go lower. And I want to start it off with a few quotes from some of my favorite investors. The first one is really in relation to long-term investors and the mindset that it takes, and it is from the great Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. And another quote about not being fearful in the market by Peter Lynch. I found that when the market's going down and you buy funds wisely, at some point in the future you will be happy. You won't get there by reading, now is the time to buy. But the most important quote in the world right now is not from one of the most respected investors of all time. The quote is, "The Fed go brrr." The Fed is crazy right now. A lot to cover today. I'm going to speak about these things from a really practical point of view. I'm going to try and do my best to make these points easy to understand, and I'm going to give both sides of the argument. Right before we get into the video, guys, can I ask you to please drop the video a like? It would mean an awful lot to me. Let's see if we can get to 400 likes. Also, please subscribe if you're new around here. We are trying to get to 10,000 subs by the end of the month. It is a big ask, but it is possible. In the last 2 weeks, we went up over 2,500 subs, so it is possible. And please drop me a comment down below. Let me know what you think about the video. Let me know what you think about the stock market as a whole, and if there's any stocks you're looking to pick up this week. With that being said, guys, let's get straight into the video. The first thing I want to speak about today is the Federal Reserve, okay? The Fed begins purchases of up to $250 billion in individual corporate bonds. And before we get into it, look at how much the Dow, the S&P, and the Nasdaq have gone up at market open. A big reason this happened is because we just got the news that US retail sales went up a record 17.7%. In March, they went down 8.3%. In April, a further 14.7%. And after this rebound, they're only down 6.1% from a year ago. But anyway, that's not what today's video is about. I just wanted to get it out there quickly. We're speaking about the Fed, Jay Powell, the printer that just goes brrr and shoots every stock price to the moon. The reason valuations are crazy right now. This guy here tried to fight the Fed and he lost over $100,000 in a week. Wall Street Bets is a terrible place to get information from, but it's very good for memes. Hail Jerome, Prince of Thieves, robbing everyone who has savings and T-bonds to give tendies to the Robin Hood squad. The Fed, round 2 of the stimulus and the US economy. So one real reason the market could keep going up despite everything else that's going on in the world is simply because of the Fed and their magic money printers. The second point is actually about the Fed again, but this time in relation to interest rates. The Federal Reserve cuts rates to 0 and launches massive $700 billion quantitative easing program. So low interest rates are important for a couple of different reasons. If interest rates are low, people are going to be more inclined to borrow money and therefore more inclined to go out and spend money, putting that money back into the economy. So all going well, this is a win-win. It essentially just gets more money into the economy and puts people in a better short-term position. A lot of people also keep their money in savings accounts. And right now, savings accounts are going to offer very, very little interest because of this, the interest rates being cut. This could in turn lead to people putting a bit more research into how investing works, be it young people or older people. And I think this is quite true to say. Robinhood is seeing trading volumes up 300% from just a few months ago. This is Robinhood, probably the most well-known, user-friendly, beginner-friendly trading platform in the world. You don't see hedge fund managers trading on Robinhood, you see your average person. So if a lot more people are going to put their money into the market, as opposed to just leaving it sit in an interest account, of course it's going to push the market up. There's going to be more money in the market. Third up is that a lot of companies, or at least some parts of certain companies, are starting to at least ease down on lockdown restrictions, if not completely opening back up. New Zealand was a fantastic example of this, okay? They didn't have a new Roni case for over 25 days. Now, sadly, there has been 2 new cases since, but still, that is fantastic compared to where we were only a couple of months ago. And then there's even places like Las Vegas opening back up. Now obviously, in essence, these are good things. In an ideal world, everywhere opens back up and the virus disappears. But this is kind of a two-edged blade. We need places to open back up. We need economies to open back up for the stock market to continue going up. If it's done in the right way, it's going to be absolutely fantastic. If it's not done in the right way, if we see a second wave, it's obviously going to be very bad. But promising signs nonetheless. Portugal is back back open to tourists from the USA, Canada, UK, Ireland, Schengen, other European countries as well. And mainland Portugal is not requiring a confinement or isolation period, so you can now just go on holidays. The Netherlands is reopening tourism for 30 countries June 15th. Royal Caribbean Cruise reopening, everything you need to know. Bulgaria reopens for tourism. Tourism accounts for an awful lot of revenue in the US. This here's from 2017, but in 2017 there was $210 billion put into the United States by tourists. So obviously, if America's to open back up, if people can go on their holidays and start pumping their own money back into the American economy, that is going to be a good thing for the stock market. People will fly on planes to get to America. The airline stocks will go up. People will go and eat out at restaurants. The restaurant stocks will go back up. They'll be staying in a hotel. The hotel stocks can go back up. You get the picture. Number 4, we're in a much better position than we were a couple of months ago. Now, don't mistake that for me saying that we're in a good position, because we're not necessarily in a good position, but we are worldwide in a better position than we were when this outbreak started. Just think back to when all of this started happening, the end of February, early March. Just think about how paranoid so many people were, and we didn't even really understand what the virus was whatsoever. Since this has happened, we've realised to an extent how we can contain it, and it's been successful worldwide. We are containing this so much more than we were at the start. When this all started happening, it was terrible, okay? There was more cases, more deaths all over the world. Every single day. It does not matter what country you were looking at. If anywhere is to see an uptrend in cases, the lockdown will happen so much quicker this time around. There will be none of this messing about. There will be none of this, certain businesses can stay open, certain have to close. We're a lot more informed of what will have to be done if the second wave does hit. So personally, I don't believe that if the second wave does come, it'll be nearly as bad as the first one was. A lot of people are saying that we could expect it to come maybe in winter, something along those lines, and it could be absolutely horrific. I just think that with the knowledge the whole world has at this stage, it couldn't possibly be as bad. Now, I could be completely wrong in saying that. I hope I'm not. But it just makes sense to me to think that the next wave, if it does come, which is not guaranteed, it won't be as bad. So if we fell down all this way, if we fell down about 35% in the market when we knew nothing about this virus and the whole world was up in the air, nobody knew what was going to happen in the world. Since then, we've gotten a lot of extra information. I don't see why we would have to come back down this low, especially with the Fed's printers going crazy, the knowledge we have, everything. And lastly, unemployment rate figures are going down. Now, this is what we got told the unemployment was, 13.3 million people unemployed. The realistic number could be closer to 17.1 million. But what I believe is more important is the fact that it is starting to go down. The figures themselves aren't as important to me as long as I see them going down. Because these unemployment numbers going down means that more people are working, more people are back to making money, and more people are going to be able to spend more money back into the economy, and it should be some sort of a snowball effect. Just as it was on the way up, it went up a little bit, then it absolutely shot up. I believe it could go down a little bit, and then in the next month or two, it could absolutely shoot down. If you think about this logically, it makes sense. A lot of people now are spending less money. Why? One, they're not making as much money. You're not working, you might be getting a smaller check than you are used to. And two, a lot of people were afraid to leave the house. They wouldn't even go to the shop to buy food. You know what I mean? People were afraid. Now, people are leaving the house again. They're going to shops. Even if they're only spending a few euro on a drink or a snack, they are putting money back into the economy. There are now more people working as well. They will have bigger paychecks. They will be willing to spend more money. So a quick recap. The Fed goes brrr. Low interest rates could encourage more spending going forwards. Some countries are essentially completely free of the virus right now, and a lot of companies are opening back up to tourists. We have a better idea of how to handle the virus in the future if it is to pop its head back up again. And lastly, unemployment numbers are looking better, which again should encourage people to go out and spend some more money. Okay, now we have to speak about the 5 negative points. And I want to teach you all a lesson on perspective. The first point is the unemployment rate is still horrible.
But Jack, you just said it's getting better. What do you mean?
It's getting better, but it is still terrible. I've said it in previous videos. If you want to find or manipulate research to suit your argument, you will do so. Somebody who is a bull on the overall market or somebody who is a bear on the overall market could both use this chart to their advantage depending on how they speak about it. This is why you should take everything that you hear on YouTube with a little grain of salt, guys. And it's why I say in every single video that you should always form your own thoughts and opinions and not listen to me or anybody else on the internet, because most of us aren't financial advisors. And even if we we were, you're not paying us for financial advice. It is all general advice or thoughts, not even advice. So unemployment rates are still terrible. There are still a lot of people in the US making less money than they are used to. And we've only had one good month so far. We had a few bad months. It's one of those things where time will tell what is to come. The next one is that the next couple of quarters earnings are still going to be very poor. And this obviously doesn't stand for every single company. You know, some companies are doing fantastic. If you look at a lot of the FANG stocks, if you look at Facebook, certain companies had very good Q1s. But as a whole, Q2 and Q3 earnings are probably going to be quite poor. I'll speak about Delta quickly and just airlines in general. We're looking at the TSA checkpoint travel numbers for 2020 and 2019, so we can compare how many people are flying now to how many people were previously flying. And another thing that's important now is that ticket prices are generally cheaper, so the airlines may be making even less money off of these particular passengers. And we can see as of late, you know, we've had 500,000, 400,000, 300,000. That is still compared to our 2.6 millions, 2.3 millions from this day last year. But keep in mind, guys, there was a lot of 100,000 days, 90,000 days, 87,000 days, you know. There was a lot of really poor days. And look, these were in April, these were in March. These are going to show up in the Q2 earnings. And this is an essential service. This isn't even just, you know, a random business who was able to close down and open back up when the government tells them. This is an essential business. Everybody expects Q2 to be bad. A lot of people expect Q3 to be relatively bad. So maybe this isn't the most important point in the world. This could have been priced in, you know, when the initial crash was happening. When we started seeing all the businesses close down right around here, that could have been priced in all the way down to the bottom. Keep in mind that the stock market is pricing down, you know, 12 to 18 months down the line. But it is something I wanted to bring up because it definitely could have an impact. And if these projections are even worse than we expect them to be, if Q2 and Q3 across the board are worse than expected, it's not going to be good in the short term at least. Okay, third up, there is a lot of extra debt in the market. A lot of companies have had to take on more debt that will have to be paid back just in order to survive, you know, the rest of this year going into next year with their reduced earnings. And I'll just keep on the topic of airlines just because why not? Delta received 2.7 billion of its 5.4 billion that's expected over the next few months. 3.8 billion of this is direct aid and 1.6 billion is a low interest unsecured 10-year loan. That will have to be paid back. A lot of companies are getting some form of a bailout from the government, but a lot of companies are going to have to pay back at least a portion of this money. Especially the smaller businesses out there, guys. The smaller businesses aren't getting helped out by the government. The businesses that aren't essential services. Look at something like Carnival, who was getting no help by the government. Remember, they had to pay steep rates for nearly $6 billion in new debt. They priced private offerings of $4 billion of senior secured notes with a coupon of 11.5%, and it's raised 1.75 billion in convertible notes at 5.75%. The debt matures in 2023. So even if these companies get back up to the revenue they were making pre-crash times, they're going to have a lot more debt, so the balance sheet won't look anywhere near as nice. Balance sheets are going to look poor for most companies. They will have had to liquidate a lot of short-term assets to get through this time. They will have taken on debt. A lot of companies would have taken on massive debt with massive interest rates. So even if the market doesn't necessarily crash again or go down too much again, I think that because of this reason here, the recovery could be quite slow. Because I mean, that is a very considerable amount of debt, and this is going to be happening all over the world on both smaller scales and larger scales. And while we're speaking about Carnival, that will bring me on to my next point. There is so much uncertainty in the market. There is uncertainty in regards to what companies will survive and what companies will have to file bankruptcy. Carnival being a big name, okay? A lot of people, especially when this began going on, thought that Carnival or maybe Norwegian or Royal Caribbean, they believe one of them will go bankrupt. The Boeing CEO said a major US airline most likely will go bankrupt. Hertz had to file bankruptcy, but for some reason it worked out quite well for them and they went up over 887% in value. That is the world that we live in today. Nothing makes any sense. Why am I even trying to make sense of this? But the point stands, there is so much uncertainty in the market. Uncertainty of what companies are going to go bankrupt. Uncertainty of Q2 and Q3 earnings. Uncertainty of what the world is going to look like in a few months' time. Is everybody going to be walking around in PPE gear for the rest of their life? Are companies going to stop paying Google to run ads on channels like mine and I'm going to have to start charging George the Giraffe rent? There's a lot of uncertainty basically. And the last thing I'm going to touch on today, okay, is this. The rise of mom and pop investors. New investors, weak-hand investors, whatever you want to call them. The rise of mom and pop investors in the stock market will end in tears, warns billionaire Cooperman, Leon Cooperman. A lot of you know who this guy is. Again, I'm going to bring you back to Wall Street bets for some entertainment, okay? Robinhood trader. up a little bit. Hedge funds are losing money. Warren Buffett's losing money. Robinhood traders on top of the world, baby. My man loves Hertz. He loves AMC. He loves Looking Coffee. He loves Delta. Oh no, I'm one of these. Up 40%. The point is, a lot of what's happening right now doesn't make a lot of sense. The best investors in the world, hedge fund managers, these people are losing a lot of money. And people on Robinhood are making 800+% on Hertz. I mean, just look at some of the most popular stocks on Robinhood. We have American Airlines, Delta Airlines, Carnival, GoPro, why are they there? Microsoft, that's a good pick. ACB, Aurora Cannabis. A lot of new investors making an awful lot of money. I mean, CNBC are posting Robinhood traders cash in on the market comeback that billionaire investors missed. Oh, number of Robinhood users with Hertz shares. This is where bankruptcy was filed. And boom! Up to the sky, more than triple. I think the fact that since it is such an unprecedented time, there is an awful lot of excitement. A lot of people have learned that you should buy stocks low and sell stocks high. So a lot of people are buying the stocks that have got hit the absolute hardest. Combine that with the Fed pumping money into certain essential services, it's caused valuations of many companies to be absolutely crazy. And I think we all know that in general, high valuations end up poorly quite often. So there we are, people. A few reasons in regards to why the market could continue to go up or why it could come back down. What's important to know is that absolutely nobody knows if it's going to go up or go down in this short term. It's impossible. Nobody knows. I mean, guys, I'm just about ready to get up and quit being a long-term investor and just wait for a company to file bankruptcy, buy them, and make a light 800% overnight. Do that every now and again. Happy days. That is a joke. Please don't do that. Please don't invest in Hertz or any other company that literally files bankruptcy because they are doing so terribly. I hope that you guys were able to enjoy today's video. If you did, please smash it a like. It helps me out absolutely massively. I would really appreciate it. Subscribe if you're new around here. I post every single day. I will catch you all for tomorrow's video. Have a great one. Peace.